This is Matthew Cratter from Bitcoin University, and today I want to continue my coverage of Bitcoin versus Monero. I'm calling this The War Rages On, though it's really more of a Twitter storm and not a real war. If you haven't watched my previous videos, you probably should check out ASIC Resistance is Just Plain Silly, which was last Thursday, and Monero's Big Fat Problem, which was Friday. And as part of this, I'd also ask you to check out the responses from two very smart Monero people, Howard Chu, who was one of the developers that helped to develop RandomX. He's got a response, a Twitter response, which I pinned in at the top of the comment section, as well as Seth for Privacy. He has a response to my video. So I would check them out and see what you think relative to these two videos. So I'll be discussing the responses a bit in this video as well. First, I want to answer the question, though, why have I been making videos about Monero lately? And I think one of the best ways to understand and appreciate Bitcoin's engineering and incentives is to compare it to other crypto and blockchains. And this is something that I've done extensively with Ethereum on this channel and shown repeatedly how Ethereum and proof of stake in general fall short. Does this mean that Ethereum and Monero live rent-free in my head? Yes, I think they actually do, because both of these are quite important projects to understand, at least at a high level, if you're a Bitcoin educator or an investor in the space. And especially if you call yourself a Bitcoin maximalist, you really should have some idea how your project compares to other projects. I don't think you can hide your head under a pillow and hope to still be able to make good decisions. This doesn't mean that you need to waste your time analyzing every new scammy coin that people ask you to analyze. But I think Ethereum is a very important project because it has the number 2 market cap and probably number 2 usage and adoption next to Bitcoin. Monero is important, at least to me, because the tech seems pretty cool and the community is mostly smart and privacy minded. And it does include a lot of refugees from Bitcoin, or that's how they call themselves. So that in itself makes it interesting to me. Important clarification, I still think you should sell all of your Monero and ETH for Bitcoin. And I'd say, in fact, I hate to even mention Monero and Ethereum in the same sentence. The Ethereum crowd is so focused on helping governments roll out CBDCs, as I cover in this video. Is your crypto collaborating with government spy coins? I talk about Ripple and Ethereum, and especially Consensus. And Joe Lubin, who's one of the co-founders of Ethereum, and his company Consensus, not only do they control MetaMask and Infura, which everyone uses to run their Ethereum nodes, they're also quite interested in helping to build central bank digital currencies for central banks. And I can't imagine something more evil than this. So I'll link to this in the description notes below. The Ethereum project, I would have to say, is mostly evil. At least I think that its leaders are, if not the average naive user who usually has no idea what's going on. And they're just focused on DeFi or NFTs or something like this, DeFi built on Ethereum. By contrast, I think that the Monero project is basically an honest project, if not misguided. As far as I can tell, it's pretty decentralized. It did not have a pre-mine. It was forked from a scammy coin or coins, and I'll link to some of that history in the description notes below. Did that scammy ownership carry through in the form of sort of a mirror of a pre-mine or something like this? And has this influenced the course of Monero's development? I honestly don't know. Please comment below if you know anything significant about this. My only knowledge of this really comes from the Stack Exchange, which I'll link to in the description notes below, and how Monero came from BitMonero, which came from Bytecoin and CryptoNode, at least according to this discussion. But I didn't have time to go that deep down the rabbit hole, and it may not matter. It may matter, though, if it has left certain people with large stakes in control. Is Monero a digital commodity? Is it sufficiently decentralized, or do the Monero devs basically steer and control the project? I would say that Monero certainly does seem to do a lot of hard forks, and some important people seem to be driving them. If Monero is a centralized project, though, they certainly do a much, much better job of obscuring the fact than do groups and projects like Ethereum or Ripple. Here's an article from August of 2022, Monero rolling out enhanced privacy features with a hard fork. So these hard forks are fairly common. They were not just for the sake of ASIC resistance. RandomX sort of put an end to that, at least temporarily, and they haven't done hard forks to try to avoid ASICs being built to mine Monero, but they seem to have gotten used to doing regular hard forks. This is something that a lot of Monero people on Twitter brag about. In fact, Monero Time has it as his pinned tweet thread about this Monero upgrade or hard fork that's coming out in 2024. I don't know if this is true or not. But you do see a lot of this. In response to this, though, Seth, for privacy, I'll link to his blog post called Dispelling Monero FUD. He talks about how he doesn't believe that Monero's hard forks make it centralized. He says Monero has yet to have a contentious hard fork, showing strong community support for every hard fork so far. This could be true, or it could just be that the developers are really leading this project. By contrast, Bitcoin hasn't done any hard forks since the 184 billion inflation bug of 2010 that Satoshi himself patched. There have been groups that have forked themselves off the network and changed the protocol. There was Bitcoin XT, there was Bcash, there was Bitcoin Gold. BSV was a fork of Bcash. These all forked themselves off the network and then proceeded to fail spectacularly. All of them are now a tiny percentage of Bitcoin's market cap and continue to lose value against Bitcoin every month and every year. The thing about hard forks, though, is you'd expect base layer money not to change itself unless it were an emergency, like a quantum attack or something like this, which might be a legitimate reason for Bitcoin to do a hard fork. By contrast, Monero, as I said, prides itself on innovating at the base layer, which comes with its own risks. Bitcoin tries not to innovate at the base layer. And when Bitcoin does do a fork, it does soft forks, which are backwards compatible, not hard forks, which are non-backwards compatible. And so this gives at least Monero devs a special power, I would guess, being able to push through hard forks. Now, you can say the community is in agreement with this. Again, you can read Seth's arguments and decide whether you agree with him or agree with me on it. But this is something that even Howard Chu, in his response to me in his tweet thread, mentioned that Monero continues to innovate on the base layer. I personally think this is a problem. This is not something that you want to do if you're going to become the global reserve asset, but it's more part of Monero culture than it is part of Bitcoin culture. Here's an important point, though. Let's say that Monero is not controlled by the devs or their hard forks. Let's say that even if Monero turns out to be a digital commodity, no one's really steering it or in charge, this doesn't necessarily mean that it's a good long-term investment. Gold and iron are both commodities, but one of them is a much better long-term investment and store of value than the other. And of course, Bitcoin is a much better store of value than gold. It seems to be a much better store of value than Monero as well, if you take a look at a long-term chart. Here is part of Seth for privacy, Seth's response to my Friday video. I want to just respond to his first point in response to my video. Comparing market cap and blockchain size is asinine and pointless. It just fits your narrative. These are incomparable or incomparable data points. I don't think this is true. What I was doing in that video is I was using market cap as a proxy for a protocol's adoption and usage. And I was doing that for a very conscious reason, because transaction volume on a cryptocurrency, on a protocol, can be faked. Promoters of a crypto can do lots of non-economic transactions. This is something that some of the Bcash people seem to have done. A number of nodes as a proxy for adoption can also be faked as a metric. One user can run 10 nodes. Of course, this is true for Bitcoin as well as Monero. Market cap can also be faked if a coin is not highly liquid, but this is not a problem for either Bitcoin or Monero, which are both fairly liquid cryptos. Obviously, Bitcoin's has much more liquidity and depth than Monero, and it has a larger market cap and trading volume, which makes sense as well. So this is why I think it makes sense to look at market cap as a proxy for Bitcoin versus Monero's adoption. I understand that the market cap is not directly related to the blockchain size. That was not the point I was making. Everyone knows that Bitcoin is much more widely held and used than Monero, even without looking at relative market caps. But I thought market caps was one interesting way of making that point. And you may disagree or you may agree with that, but I think we can conclude that Bitcoin adoption is much more widely spread than Monero adoption at this point. You can just ask a grandma or a grandpa and ask a kid. Both will probably have heard about Bitcoin, but not Monero. Monero and privacy, the whole privacy, people interested in privacy, is still a very niche part of the world. I think it's a very important thing, but it still is much more niche than Bitcoin. So the point I was making in Friday's video, but talking about blockchain bloat, is that Bitcoin is already widely adopted, or at least much more widely adopted than Monero. Has a blockchain size of 539 gigs, while Monero is much less widely adopted. Monero still has a blockchain size of 110 gigs, or about 20% the size of Bitcoin's blockchain, even though Bitcoin is much more widely used and has been around for much longer etc. And I argue that that's a problem, and that if Monero is ever widely adopted, the blockchain bloat caused by its privacy tech will become unbearable. Many fewer people globally will run Monero nodes. It's not just the storage requirements, as I said, but also bandwidth requirements. How long will it take to download the Monero blockchain if Monero's usage and adoption goes up a lot in rural Africa, for example? It's already a huge problem for running an Ethereum node in the global south, and no one even does it in the global north, or they run a prune node or trust various checkpoints, etc. Not so with Bitcoin nodes, which verify every transaction since 2009. So my belief is that the Bitcoin blockchain will not suffer from the same blockchain bloat from privacy tech like Monero will. And Monero obviously includes a lot of this privacy cryptography like ring signatures. So blockchain bloat with Monero is still something that I'm worried about. It doesn't worry Howard Chu. You can read his response to me where he talks about, even though that the average Monero transaction size is about 4 times the average Bitcoin transaction size, SSD prices have plummeted over the past, call it 8 years, as have bandwidth costs. And bandwidth has increased, internet bandwidth has increased over the past 8 years. So he argues that these things will keep pace and that the Monero blockchain will not grow more quickly than Moore's law helps with SSD prices or bandwidth, etc. And this is something that is sort of an unknowable. You can take comfort in this and hope that this is true. It may turn out to be true. So you can read his rebuttal and decide whether you agree with it or not. There was an interesting comment from Larry Ruane. I'm not sure I'm pronouncing his name correctly. He says his response to Friday's video was good video for the more technically oriented readers here. And he admits, I was a full-time Zcash developer, another privacy coin, and I believe it's Electric Coin Company, employed from 2018 until 2022. Since then, I'm a full-time Bitcoin core dev. One of the reasons it becomes more expensive to run a Zcash or Monero full node is that it's necessary to track spent outputs, TXOs, in addition to unspent outputs, UTXOs, as is the case with Bitcoin. In both cases, this data cannot be pruned, and access performance is critical to transaction and block validation, and thus overall node performance, which puts a demand on memory, not just disk. But it's expected that the size of Bitcoin's UTXO set, in other words, these little chunks of Bitcoin at each address, will eventually stabilize or at least grow at a slow rate, whereas the TXO set will grow unbounded. So although this isn't related to the size of the blockchain, it does directly affect the cost of running a full node. You are correct, Matthew, if either Zcash or Monero were used as heavily as Bitcoin, in other words, their adoption was as wide as Bitcoin is now, it would be impractical to run a full node for most people. You'd end up with less decentralization. So here's an argument from a guy who's actually a dev. Unlike me, you can tell me if you have expertise in this area, you can tell me whether this makes sense or not, and you can pair it with Howard's response to in that tweet thread, which I'll link to in the description notes below. Here's another interesting comment on Twitter from Gingeropolis. He said that when I'm comparing Bitcoin and Monero, I'm comparing apples to oranges regarding transaction size or block size, because Monero provides fungible money. This is a highly debatable thing. Bitcoin does not. To get close to fungible money on Bitcoin, you got to do coin joins or transaction chaining, etc., which significantly increase the transaction size. So what he's basically arguing is you could do one transaction on Monero, or you'd have to do a coin join, which is a collaborative transaction, do multiple transactions on Bitcoin to get the same privacy guarantees. I'm not sure I completely agree with that, but I think it is a very interesting comment. It will make more sense as we finish out this video, and you'll see why it might not even matter, especially at second and third layers. And that's for this reason, because this comment and my previous video's arguments assume that the future of Bitcoin and Monero is mostly on-chain for each of those, which may or may not be true. Perhaps on-chain Bitcoin ends up instead as primarily a global settlement-based layer, like a decentralized Fedwire, which settles the US dollar. And I would say Bitcoin miners, you shouldn't worry about transaction costs and the falling block subsidy. Bitcoin miners will still get paid when people open and close Lightning Network channels, for example. But maybe a lot of this activity moves to the second layer. I talk about this in terms of with relationship to Bitcoin speed and how many transactions per second it does in this video, which I'll link to below, in which I compare Bitcoin actually to Fedwire and show that they have similar amount of transactions per second. And so Bitcoin could certainly scale to handle the same transaction value, total value that Fedwire handles, which is trillions and trillions of dollars. But in the future, most people may be using off-chain, in other words, layer 2 or layer 3 Bitcoin. New technologies like the Lightning Network, eCash in the form of Fedimint or Cashu, I still need to make some videos about this, statechains, etc. And I think that if this is true, it's fair to argue that level 2 development is much further advanced, both from a tech and a liquidity perspective. For example, the Lightning Network, the liquidity gets better every single day. And so it's more advanced on Bitcoin. These level 2 or layer 2 solutions are much more advanced on Bitcoin than on Monero. And here's a comment from DJ. Want to annoy a Monero shell, point out to them that the future belongs to off-chain transactions and that Monero's privacy will be completely useless to most people and that they're way behind in second layer development, layer 2, like the Lightning Network, for example. So that's an argument you can also make. I also wanted to touch on a couple of great tweets from Francis over at Bull Bitcoin. I pronounce his last name if my French were better, or if my Canadian French were better. But I wanted to highlight a couple tweets that he was highlighting in the last week. And this is with regards to the whole debate over privacy coins like Monero and Bitcoin. And this is what he argues in a couple tweets. You will never have payments privacy without a fully circular monocurrency economy, in other words, a Bitcoin standard, a global Bitcoin standard, or a global Monero standard. Hence why privacy shitcoins are non-starter. Every point of conversion is a de-anonymization bottleneck. Weakest link cancels all privacy benefits. In other words, when you want to trade out of your Monero for something else, for fiat or Bitcoin, low liquidity, honeypot, KYC, coin aggregation. He goes on to say, good luck trying to establish the Monero standard. That ship sailed 13 years ago, arguing that the Bitcoin standard, it has this first mover advantage. And then he goes on to argue if you need to go through a centralized service to liquidate second layer Bitcoins or altcoins for on-chain Bitcoins when you need to spend them, their privacy is only as good as Bitcoin's anyway. For example, the drug dealer that accepts Monero payment online will have to pay his suppliers eventually in Bitcoin or fiat that he gets from selling Monero for Bitcoin, assuming that his suppliers don't accept Monero as well. This is sort of the chicken and egg problem with network effects. And this is what helps the first mover have a real advantage. If that's the case, what's the point of XMR, of Monero in the first place? There are a couple of variations on this tweet. After you sold your goods for Monero, what do you do with your Monero? How do you resupply yourself with the fiat you need to run your business? I know enough about how people use coins in real life to know that all XMR flows back into Bitcoin eventually. Liquidity equals privacy. Monero is not more private since general anonymity set is very low compared to Bitcoin. In other words, there are many more Bitcoiners than there are Monerans. For example, it's even easier to de-anonymize since you only have to do surveillance on a limited trading pair, Monero, Bitcoin trading pair, and these are not the most liquid trading pairs, I would imagine. On paper, privacy is not real life privacy. And then finally, another tweet from Francis, you are less likely to get caught or de-anonymized doing real-world, high-risk commercial transactions, for example, capital flight from Venezuela, by purchasing using Bitcoin with privacy-enhancing mods like CoinJoin, Wasabi, by the way, don't use Wasabi, Samurai, etc., than you are by purchasing using Monero. Finally, how to check Monero volume on BISC, which is a decentralized exchange. How do you buy XMR in BISC? Well, I think he's implying that most of the time you buy it using Bitcoin. By the way, if you're in Canada and you want to buy Bitcoin, you can use Francis's company, which is called Bull Bitcoin. I'm not affiliated. I don't know Francis, though we do follow each other on Twitter, but he seems like a good Bitcoin guy, so I would recommend you use it. Again, I'm not being compensated. I've never used it either, but I've heard good things about Bull Bitcoin in Canada. Finally, I wanted to end with, I thought, an interesting comment and my response to one of these Monero videos. Here, this is from Yolan Zolan 5583. But Patrick makes a good point. You give a pass to Bitcoin's bloat that results in inscriptions and other garbage, but negatively judge Monero's bloat, which results in higher security and privacy. Very strange standards. And my response was, good point. To clarify, I'd much rather have bloat from privacy tech like Monero has than inscriptions. My concern is that Monero's privacy bloat will just be too high. Monero blockchain is already quite large, even though adoption is still low relative to Bitcoin. Bitcoin block size was capped at 4 megs back in 2017, long before inscriptions were a thing, while Monero has no block size cap as far as I can tell. So if you know more about these things, feel free to weigh in the comments below. Finally, in terms of responses to my 2 videos, again, I'm going to highlight this Twitter thread from Howard Chu, from, as he's known, HYC, to Monerans. Very smart guy, very polite guy, and I want to apologize to him. I thought he had deleted one of his responses to me on Twitter. In fact, he did not. He accused me of deleting one of his YouTube comments, which I did not, and it turns out that that the YouTube comment got deleted by YouTube, has been happening to a lot of you, and so I posted a link to his critique in the pinned comment section. But my greater point here is, if you want to talk about Monero, talk to the high quality people like Howard Chu or like Seth for Privacy, both of whose critiques and rebuttals of my position on Monero versus Bitcoin I will link to in the description notes below, and I've addressed some of their responses in this video. Avoid people like I hate to even give him screen time here, but Monero Time, for example, who posts things like Monero, there are more Monero nodes than there are Bitcoin nodes, and then I'll link to this in the description notes below. But what he's doing is he's counting visible Monero nodes, but he's not counting visible and invisible Monero nodes, comparing apples to apples, comparing them to visible and invisible or unreachable Bitcoin nodes. So some intellectual dishonesty going on there. If you're going to learn about Monero, learn about from high quality people like Seth for Privacy and Howard Chu. And then lastly, I would ask you, let's be polite to Monero people in the comments. I welcome any sincere criticism of Bitcoin and other perspectives. Let's be smart and toxic and funny, but also kind. And it's important to keep in mind the big picture, which I don't always keep in mind. I'm guilty of this myself, but that is that we want to increase Bitcoin adoption, and nothing would make me happier than more Monerans coming on board to help build on top of Bitcoin, because I honestly believe that Bitcoin has this head start, and whatever you think about Monero's capabilities, that it's still going to remain sort of a fairly small niche project, and that Bitcoin's going to be the real winner here. And to the extent we can bring people who understand privacy and best practices for privacy, if we can bring them over to at least help us out with layer 2 and layer 3 on Bitcoin, or other things at the base layer like coin joins, etc., I think this would help all Bitcoiners as well. If you found this video helpful, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.